Okay, so welcome back to another video. In today's video, I am going to break down today's trade I was able to take on the NASDAQ 100. Okay, so in the first trade, it was actually kind of a break-even trade, and I'm going to explain that. At 9:30, the opening bell, price pushed down to the 8:30 open level right there. While the S&P 500, what do we see? At 9:30, price pushed all the way down to take out sell side. Now look, on the NASDAQ sell side, liquidity is still open, but on the S&P 500 has been taken, right? So this is a bullish SMT for me, right? That's how I'm looking at the market. It's a bullish SMT, right? So what do I need to see? All I need to see is just to see price get inversed right here. But that wasn't really what I traded. I took my trade off of. Instead, I knew that fair value gap was going to be inversed. So as soon as I saw price creating a CISD, I wanted to enter off of this, but because my broker was kind of laggy and the network wasn't that good, I ended up having a bad fill right there because I actually wanted to get a fill off of the CISD right there, but I don't know if it was the volatility or how strong the market moved. I ended up having a bad fill somewhere right there. So instead of a 1 to 2, I ended up having a 1 to 1 because right here would have been a clean 1 to 2. So ended up having a 1 to 1. My first take profit was right there, and my second take profit was right there at London highs. So you can see, first take profit got hit, but second take profit didn't get hit. So this is what happened, right? After first take profit got hit, I didn't just throw my stops. Instead, I waited for price to take out this high here. I wanted to see price go above it, and as soon as I saw that, I ended up just reducing my risk right there. And after I did that, price just instantly came and took me out. And few minutes later, price ended up hitting take profit. I didn't even know price hit take profit because while I was in class, I was trying to focus more on the teacher. So I just decided not to open trading view and focus on the class because after I have a loss, I try as much as possible not to just look at the chart for a gain. I just trying to give myself like some few minutes before I get back on the chart. And I was in class then, so literally didn't make anything off of that trade. So while I was still in class, I didn't open TradingView. I opened TradingView back again because I decided not to trade at this time anymore. I decided to trade at the 10 to 11 a.m. macro, and that was what I did. So when I came back, I realized that price had been giving back-to-back setups. Like, bro, look at this right here. We took London highs on the S&P 500. Like, London highs is still all the way high here. So we didn't even near the London highs right there. And that created a bearish SMT, right? So after seeing that bearish SMT, we have inverse fair value gap, good sell trade, take profit 1, 2, and sell side take profit 3. Another good setup right here. You can see sell side gets taken on the NASDAQ. So on the S&P 500, price also took out sell side. So, bro, as soon as we're pushing up, we're inversing this bearish fair value gap here. So it is another good buy trade here. Take profit 1 can be here, or take profit 2 can be there. So yeah, that is literally two crazy setups back to back, right? And now 10 o'clock opens, and I'm looking for a good trade right here. So 10 o'clock opens, as you can see, price pushes so high to take out this buy side on the NASDAQ. And the S&P 500, price didn't have as much momentum as the NASDAQ did to take out this buy side. So we created a bearish SMT right there. And after seeing that bearish SMT, all I needed to see was just to look for a fair value gap that was opened. And this fair value gap was open. So I knew this fair value gap was waiting to get inversed, right? So as soon as I saw that fair value gap getting inversed, took my sell trade right there. Luckily, we had a bearish fair value gap here. So I was still kind of strong, even though I saw price retracing, because when price was retracing, we were just staying below the consequent encroachment, even though right here the wicks are doing the damage. But you can notice right here, the bodies are staying below the consequent encroachment of that bearish fair value gap. And there on the S&P 500, I'm just looking at this fair value gap here as a breakaway gap, right? So price ended up pushing down to take out my first take profit right there. But my second take profit didn't end up getting hit. And that was because if we look right here, you can see the S&P 500 is really pushing to the downside. As the S&P 500 has already taken out sell side, but in the NASDAQ 100, we haven't taken out sell side at that time. So I ended up going really aggressive because of the SMT. Like I literally said it. And also because I was really okay with me getting stopped out. Because even though I get stopped out, I wouldn't like really feel it because I was already good with the profit that I was making. Right. So I ended up going really aggressive right there. And price ended up stopping me out. And even though later on ended up still hitting my second take profit. But yeah, that was basically today's trade. And I'm going to show you the two videos. The first video of me having the break even trade, and then the second video of me actually taking this trade live. So yeah, that's basically it. And I'll see you guys next time. Peace.